Buki's online learning platform for ladies. I am Buki Gats. Today we have in class with us an exceptional lady whose high pedigree in stockbroking and asset management is worthy of note. She is a fellow of the Chartered Institute of Stockbrokers and associate chartered accountant of over 18 years working experience. Our guest is currently the Executive Director, Investment Management at Stanbic IBTC Asset Management Limited. Prior to this role, our guest had occupied several leadership positions within the Stanbic IBTC family. And on a lighter note, coincidentally, a name depicts, and exemplifies our roles and activities in investment management. It means to build your wealth, to add to your fund, and build your portfolio. You need to tread carefully and invest wisely. So in an exceptional and phenomenal way, please welcome with me, Mrs Busola Jejelowo. I'm sure you've not seen your name interpreted in that manner before. It's really amazing.
I'm actually, it's amazing. I think you're just one of the few people my bosses laugh at me and say your name and wealth. A few people catch it.
Yes. I think when I was thinking about the program, I just thought of it. I said, wow, a name, Busola Jejelowo. So to really multiply your wealth, your fund, and increase your portfolio, you need to tread carefully and invest wisely. Thank you very much for honoring an invitation to be on this show.
Thank you very much. Thank you.
So before we go on the first question, we would like you to give a brief chronicle of your threshold in stockbroking and asset management. How did you start your career and what's your driving force?
Thank you, Buki, for that question. It's interesting how when I started out, did I start out to do stockbroking? No way. I remember when I wanted to go into university, my major aim was that I wanted to be an investment banker, and I wanted to go into UNILAB to study accounting. Thank God for my father, who made me enroll into the Institute of Chartered Accountant at a very early age before I got into university. So I just felt naturally I should do accounting. Just to summarize it, I never got accounting. I ended up studying estate management, which for me at that point I just said it was another investment option. And when we say investment option, just another avenue to invest your money. And I always told my colleagues then that I would like to be an investment banker. I finished, fast forward, my first job was as a private banker at the then lead bank. And I always found out that I was very much interested in shares, in prices of shares and all of that. And I know that encouraged me, and I started writing my CIS exams. I wrote my CIS exams, I qualified. And there was an institution, which is the current institution where I work with right now, that I always wanted to work with. And God made it possible. I started working with them. I started out as the chief dealer. That was how my journey into stockbroking started. Stockbroking and asset management are intertwined. I would say asset management is just more specialized in nature. Stockbroking just typically speaks to you buying and selling of shares, which we will go to, I'm hoping, later on. So that's how my journey started. So I started stockbroking. I did that for over 10 years or so, and then did a bit into wealth management, and then went into becoming executive director in asset management. Like I mentioned, they are all intertwined because it all relates to investments.
Wow, thank you very much. I would like to go into your core values. We know that attaining the position of the executive director in investment management is not a linear feat, and you must have some core values. I'd like you to share with us some of your core values and explain how this can also help our viewers if adopted in their businesses and careers.
Okay, thank you, Buki. Interesting. I would say that the core values are, for me, majorly, one, you have to be very hardworking. Nothing good comes easy. If you see anything good and it became easy, know that it's going to develop wings and fly away or be destroyed very early. Like I mentioned when I did my introduction, I spoke about my father. My father is a disciplinarian. He believes so much in education. I think for him, the things he couldn't achieve, he pushed a lot of his children to achieve that. I'm the first child. So he ensured hard work was one of the core values for us. When I started working, another core value that I picked up was holding myself out to do available job that were made available within the organization. So I'm raising up my hand to say that I'm available to help them out. You might start out and it might look very funny and those little menial. I remember when I started out, even as a chartered accountant then, my first few months was just majorly filing, making photocopies and all of that. It looked funny, but I didn't complain. I did all of that gladly. And from there, I had bosses who mentored me. You must have an open mind to develop yourself. You must have an open mind to increase your knowledge, because the moment you stop increasing your knowledge, then you begin to die at that point. You must have an open mind to continue to develop yourself, and also have an open mind to add to the organization, add value to them. Hold yourself out to be a responsible individual, and then you realize that the sky will be your limit. I'm also a Christian. I believe so much in prayers, and you must merge all of these things together to be able to achieve success.
Yeah, so hard work is coming back again. So whatever we want to build, hard work is key. Nothing good comes easy. Well, to move to the third question, would like you to please, because we can't miss this opportunity. We want you to demystify, simplify share stocks, bonds, asset management. I'm sure these terms are not for the big investors. So how can you simplify it for small investors?
So I like the way you put it, Buki. Shares are not for big investors, and actually there are avenues where what I would call retail investors, or I wouldn't want to use the word small investors, retail investors who have as little as 5,000 naira can invest. So shares are just typically speaking to the ownership that you hold in a particular listed entity. So let me give you an example. So a very popular company that we're all very familiar with, so Dangote shares or Cadbury, they can hold out to say that we want to raise capital, meaning that we want people in the public to be part owners of their company. And the way they do that is to, one, hold out to say they're going to sell shares. Part of their ownership, sell shares to the investing public to buy into the company. Or they could decide that we want to borrow money. And in borrowing money, they would then say, we want the public to come in and borrow money. We want to borrow money from the public to invest, and then we'll pay them an interest at a given specific time. So for shares, it's just a unit of ownership in a listed entity. Or should I say, even you, Buki, you can decide that you want to, you've floated your company or your talk show, and then you want people to be part owners in that company. When you then, when you break down the ownership of your company into smaller units, those units are called shares. Yes, and those shares are attached value to. So you could say that one share in my company is worth 50 naira, or one share in my company is worth 100 naira. That's when you hear companies say that they are doing a public offering. That's how you buy, the one major way you buy into those companies. Or you go to a stockbroker and tell the stockbroker you want to open a stockbroking account. The minimum required to open a stockbroking account differs across board for all stockbrokers. So stockbrokers are people who are qualified and who are registered to help you buy shares on the floor of the Nigerian Stock Exchange. Those are means by which you can own shares directly. But the easier ones, because more often than not, owning shares are not, it also means that you've got the expertise to be able to track the performance of those companies and to be able to know. The easier ones are where you approach an asset management company. So an asset management company are typically those who are experts and they have pooled money together from different investors. So you can bring 5,000 naira, I bring 5,000 naira. Like the organization where I work with, Islamic Identity Asset Management, the minimum is 5,000 naira. So you collect 5,000 naira across board. We will put them in a pool and then invest that money on behalf of different people and pay them what we call dividend once a year. Do you understand? So you can then, we then give you the value of your shares at a given period of time. So you get a statement of account where you look at the values of the shares. Sometimes some people go, I've got enough money. So maybe some organizations allow you to open a stockbroking account with 100,000 naira. So I have 100,000 naira. I can buy those shares on my behalf, by myself. So they approach a stockbroker who buys some things for them, and then they open a CSS account and they put those shares into it on their behalf. So it's just basically ownership of companies. That's what shares are. Debentures are where those companies have borrowed money from you. So in that instance is a debenture. In the other instance is that, because after some time they will pay off that loan. But for shares, it will continue to hold the shares for as long as the company exists, or up until the point where you decide that I want to sell off the shares, I don't want to own it anymore.
So now it means that as a school teacher, or an artisan,
Yes.
or whoever you are, whatever you do, you can have a share.
Oh, yes.
You can invest.
Oh, yes.
So investment in shares is not for big investors alone. Hope you understand that, class.
Oh, yes.
It's not for big investors alone. So you can, whatever you do, so long as you have something coming in for you on a daily basis, then you can invest in shares as well. And I would also like you to shed more light on how they get their returns. So when I invest as a school teacher, maybe I hand a certain amount of money and I want to invest in share. How do I get my return? Is it like on a monthly basis, weekly basis, annually? I think we would like to know that, right, class?
Okay. So for the mutual funds, depending on the companies, they pay those dividends annually once a year. So you find that when you open a mutual fund account,
so you don't go back that I want my money back. Okay.
No.
So it's
they pay the so let me explain two fundamental ways where you can get your money back. So there's the capital, which is the amount of money that you use to buy the investment. So let's assume Mr. A invested 10,000 naira to buy into a mutual fund. That is the capital. And then there's what we call the return on the capital, which is the dividend or the interest on that capital. The interest on that capital, depending on the organization. So let's say a mutual fund, for example, and they tell you they'll pay you once a year, depending on the performance of that mutual fund. At the point when you're opening that account, you attach a bank account number to it, because SEC has made it mandatory now. They don't pay cash to the owners of the investment.
It goes into
your account. Sometimes some of the investors will come and say, you know what, I don't want to spend my interest or my dividend. All of these words are used interchangeably. They would say, invest that money again.
Okay.
So at the point when you're filling the form, you will put it there. I want my interest to be reinvested, or I want my interest to be paid into my bank account. Those who put their bank account there and opted for that, at the point when they are paying that interest once a year, they will pay their bank account with that money. For those who opted for please reinvest, they would then reinvest that money into their investment. So let's assume you started with 10,000.
So you have the option to
reinvest or collect your money. So it's interest, exactly. Or
without the capital.
Without the capital. So let's assume you invested 10,000 naira and you opted for reinvest my money, and we said, okay, we're going to give you interest of 500 naira. So when we invest the money, you will find out that your capital would have grown from that 10,000 naira, and you'll be showing that 500 naira. So that will then be rolled over into the next investment, and it will be growing. For those who've opted to collect their money, you will find out that that money is being paid, but their capital remains. That's on the mutual fund side. For those who buy shares also, the companies where they bought the shares into pay them dividend, depending on their dividend payment ratio. So some companies pay twice a year. They call it interim dividend and final dividend. Those who pay twice a year also, the registrars collect your bank statement too, through your stockbroker, and they pay those dividends into that bank statement. Where you don't give them a bank statement, it will be accumulating with them.
It should just be there.
Or to just be there. it is not reinvested, that money is just there.
So you need to indicate that you want this money reinvested. So if you leave it there without an account to get the money transferred into, if you just leave it there without an indication that I want this fund to be reinvested, then the money will be there.
So on the mutual fund, it will be paid to you. When you buy shares, it won't be reinvested. It will just be reading at the registrar's level to say Bookie was paid dividend of 500 naira. The money will be reading in their bank statement.
That's all. But because there's no indication that please help me reinvest this money, the money is just there. So it's important that when you are investing in shares, you pay attention to all the details and fill the proper columns so that you don't cheat yourself.
Exactly.
I would like to ask an elementary question. And if I invest, let's say 100,000, and the option is that I'm getting my profits or dividends after 1 year, how much am I going to have on it? It's an elementary question, I know, but I need to, for the purpose of the class, I'm sure you know, some people have like 100,000, 50,000, not 5 million, not 10 million, but they want to know that if I put this money in shares, after 1 year, what will I have? Is it, some banks will tell you you have 50,000, 52,200 naira. So you wonder, so is that why I should keep my 50,000 for 1 year? So if I invest in shares for 1 year with just a minimum amount of 50,000 or 100,000 naira, how much am I likely to get as my dividends after 1 year?
So I'm not going to give you a straightforward answer because investment, we have to be very careful that you educate the people who are investing, which is why you need an expert. Okay. So the companies who declare dividend or what we call interest or the payback, it depends on the performance of the company. Do you understand? So in the years where they perform very well, in their policy they can decide that we will pay out total of this percentage of what our profits. So let me break that down. I can say that in this year, if our profit is 10,000 naira, we will pay out 1% of that 10,000 naira
to
all the shareholders. In the year they don't make profit, they will pay out.
You can't give what you don't have anyway.
So having said that, it is very important that before you do any investment, whether it's 5,000 naira, whether it's 100,000 naira, speak to an expert. So say for example, if you want, I don't want story, I want my capital back, I want some form of interest back, no matter how little. There's an investment portfolio where they will put you. If you are one that you don't mind, so on shares, let me tell you one thing. Shares, your value can appreciate speedily. The same way you can lose your capital depending on the performance of the Nigerian Stock Exchange. Like I told you, there are companies underlying those things. If those companies don't perform well, it's going to impact your investment.
So it means you need to be careful where you put your money, where you invest
in your money. There are options where you can invest into what we call typically the money market. A money market are just basically treasury bills, fixed deposits, and all of that. Whatever it is, those interests might not be very large and big, but you are assured that your capital will be fine and they will pay you something small. There's a time in this country where on treasury bill, the yield on them were double digits, above 10%. Now is lower.
Okay, I read somewhere that in 2021 the federal government bond is not so encouraging at the moment, and at certain point it was such a good opportunity to put your money in a good place to put your money.
So you can imagine at those moments. I mean, after the COVID, when 2021, in 2022 towards the end of last year, interest dropped below 1% on money placements, and there was a time where you could get as high as 9-10% on those things. So it depends on the performance within the economy, the performance of those instruments where you have invested your money. But still does not discourage anybody from investing. It's a good culture.
So investors, it's important for us to invest, no matter how small, no matter how big your money is. Don't just keep it there. Don't just keep it lying without it working for you. So you need to invest in shares and other money market instruments. And thank you very much, ma'am, for this educative session. But before we go, would like you, we know that as year 2021 is winding up, we would like you to give us some financial, based on your financial literacy, we'd like you to give us some investment advice for our ladies and of course all our viewers out there.
Okay, my investment advice, you had said it earlier, would be whatever you do, you must invest. And I'm going to use this story. So I met a young lady who, at the time I met her, I was looking at her to say, oh, she's rich, she's this. And one day we sat down and she said to me, Busola, I started investing very, very early. I started investing at a point where I was in school and I was also working. And she brought this principle of no matter how small your revenue is, set out a particular amount of money and go and invest. Like I mentioned earlier, speak to an expert who will sit down with you and tell you whether it's as small as just money market, put that money there, no matter how small it is, set it aside. So if you're earning 10,000 naira, decide that you would say, I will do 100 there, or I will do 200 there. And she said that's how she started to what we have now, which has become very big. Another investor that I know, his father started investing for him at a very early stage, to the point where he had accumulated those shares, and the dividend from the shares was what he used to build his first house. Those things are real. So what am I saying? It is not too late to start. Start with whatever amount that you've got. Like I said, speak to an expert where we'll sit down with you and then go through, these are the things that you can do, and then invest. Even if it is a savings account, it is a place to start with, where you can accumulate your money to get that minimum capital required and then move into other investment objectives. Beware of your risk appetite. And what do I say about risk appetite? What threshold, what is that amount of money that you are willing to lose and not lose your sleep? It's very important, because there are quite a number of things that are out there. People will say, oh, bring your money, we will double it for you within 24 hours. We will double it for you within 50%. Exactly. I said to people, be weary. Like I said, nothing good comes easy. You have to work hard for it. Beware of those things. Yeah? And then you can accumulate them and then begin to invest. If you are the type that, the money I have, I do not want to lose one kobo, there are investment buckets for you where you can put your money in. It's just that your return might not be very large, but you know your capital is there and you will get a reasonable return over your money.
Okay, you just mentioned something very critical. So for some that have their money, they want to invest, and at the same time they don't want to lose their money because they're just managing it. But for the sake of the knowledge of investment, they just want to do it, but not willing to lose their money. What are those buckets, buckets that they can put?
So those ones should just do purely money market. When I say money market, fixed deposit, treasury bill, that's all. They should not venture into shares.
Okay.
So shares can appreciate quickly.
And
The same way it can crash. We've had history in Nigeria.
So it means you're safer with federal government bond, with money, with treasury bill, and what else?
With money market, those fixed deposits.
Money market fixed deposit.
Yes, or mutual funds that are money market related. Yeah, because you know that your capital is okay, and then you get a bit of return. The equity part of it are for those who have a higher risk appetite, where even if market should drop, you know that if you buy into quality names, even if their share value drops, they would appreciate back and you get dividend. You don't mind. But in the scenario where you do not want to stay put within the money
market. So for instance, in Stanbic IBTC, I believe that there are certain investment portfolios that both small and big investors can take advantage of. Can you share with us some of those opportunities in case of our viewers that may want to invest in one of those assets?
Thank you, Buki. Like I mentioned earlier, you heard me use the word mutual fund. So within Stanbic IBTC Asset Management, we've got about 17 mutual funds for different investors to put in their money. And I emphasized also the importance of the risk appetite.
They are safe and profitable,
yes,
right?
Yes. So depending on your risk profile, from money market instruments, which are for those type of investors who want preservation of capital and some form of return of money on their capital. We've got what we call the standing IBTC money market, and with as little as 5,000 naira, you can invest in that money market. And we also have to as high as what we have for investors within the equity space who have a larger risk appetite, looking for a more aggressive way to grow their capital and also have a return. We've got different equity buckets where we can put in their money. In fact, we also have what we call the Standard IBTC Dollar Fund, with as low as $5,000 you can invest, and then reinvest with as low as $1,000. So there are different investment options that are available where you can put in your money. Ours is to first meet the investor, and then we'll profile the investor, and then recommend the mutual fund for the investor to buy. And typically we also have things for those who have more capital to deploy, that we can then do bespoke portfolios for, where we will speak to them and do a regular one for them, depending on their risk appetite. So there are quite a lot of opportunities out there within the Islamic IBTC asset management for them to explore.
So once the dividends, the duration for the dividends of these investments, are they all annual returns?
Oh yes.
They are all
we pay annually. Yes. So just to make it very
so none is like 6 months, 3 months, because you see some investments you say in 3 months, in 6 months. So none of these.
No, we do. So for the mutual fund, we do the payout once a year, not twice a year. Yeah.
So for all the investments in Stanbic IBTC portfolios, everything has to be annual returns.
Like on the money market fund, for example, you will see your interest being dropped on it, because that one, it is accrued. So you have different tenors where those monies are invested in 90 days, 180 days.
So you can only monitor your interest dropping, but so you can access them
at the point where, like the money market fund, yeah, if you want, so if you come to us today to say, I want to take out my money, or I want to take part of my money, it would drop with your accrued interest. Do you understand what I'm trying? It will drop with that accrued interest.
So I can't terminate the investments. If I terminate it, I can't have access to them. So I can have access to the investments if I terminate it.
Yes.
But if you want it to continue, it has to be till the end of the.
No, okay. Let me go.
What I'm trying to say is that, meaning that if you're telling me that the return is paid annually, so if I have it in mind that I want to invest my money for 6 months, but I know that by your policy it has to be an annual return. So does that mean that after 6 months I can decide to terminate my investments and take my profit so far and the capital?
Yes, okay. So let me explain. So each product has its own peculiarity. Yeah. So let me use the Stanbic IBTC money market for example. Your holding period means the minimum time you're expected to stay in that investment is 1 month. That's all. You can come to us before 1 month and say you want to take out your money, it's allowed. But 1 month you stay within it. After 1 month you can come in and say, I want my money back. On the day when you come and tell us you want your money back, we will calculate your capital plus your accrued interest that will be paid to you so far. Yes.
So you terminate it, you determine the level of interest you have, but if you're willing to wait,
exactly, you get more.
The real time is annual return.
No. The real time is not annual return on the money market.
On the money market.
No.
So which one is annual return? Which one is permissible to be terminated between the? Some people will say that terminate these investments, you lose your interest. Some investment portfolio do say once you terminate this investment, then you lose the interest if it's meant to be 1 year annual return.
Okay, so not necessarily you won't lose your interest. You just so say for example, like the Stanbic IBTC Dollar Fund, the minimum holding time is 6 months. If you terminate before 6 months, the penalty charge will be a certain percentage of the accrued interest.
So you just have a penalty, not that you lose the total interest.
No.
So meaning that people can still decide how long they invest.
Yes.
Okay,
yes.
without losing their money or their interest outrightly.
Yes. So like the equity fund, for example, those are largely shares. You know the underlying instrument, they pay at a certain time. We have to collect that money within that time and then do distribution to the fund.
Thank you very much. I'm sure that this session has been as very educative as you agree with me. Thank you, Mrs. Busola Jejelowo, for being part of this show, and I'm sure that we'll bring you back to shed more light on investment tips. This has been a very wonderful session with you, and we hope to come back with testimonies. Thank you so much. Thank you very much for being part of this show, and on behalf of the exceptional and phenomenal ladies out there, we'd like to say thanks for coming.
Thank you very much.
Appreciate the knowledge that you have shared with us today, and you will be proud of us. You will be proud of us when you see our money growing.
Thank you.
Thank you so very much.
Good to see that. Thank you. Thank you very much, viewers. God bless you.
Thanks. Now you've heard from our guest today that you can be part owner of any business or any company by buying their shares with as low as 5,000 naira. You can put like 50,000 or 100,000 naira in shares, but there are two things that you must note. The first is that you need to speak with an asset management company for proper guidance so you don't lose your money. And the second is that if your risk appetite is not high, you may need to reconsider investing in shares and divert your fund to money markets instruments like fixed deposit, federal government bonds, or treasury bill. You can also visit the Stanbic IBTC Asset Management Company's website for further information on how you can invest your fund. Thank you for hanging in there with me today. Remain exceptional and phenomenal always till I see you in the next video. But please don't forget to subscribe on this YouTube channel and follow me on all my social media handles. Bye for now.
You're an exception.